Hey everyone, welcome back to Fiscal Voyage. I'm Felix. In today's video, we're going to talk about an ad that I recently did. As you guys know, the market is still at all-time highs, but there's been a lot of pullbacks in the healthcare industry, and some other dividend stocks been pulling back recently. And so what I did is took advantage of a nice pullback on a dividend aristocrat, and this stock is that I bought is Johnson & Johnson. I bought 10 shares of Johnson & Johnson at $143.66, about $1,436 there on the 16th. So it was yesterday from when I making this video on the 17th. So I bought this share, and I'm going to tell you why I bought more shares of Johnson & Johnson at this price range. I'm going to show you fundamentally and as well as technically why I bought shares at this price point. And first off, if we go to fast graph, you can see here the company has been very steadily growing earnings at about 6.4% annually over the last 20 years. And you know, during COVID here, it did had a negative year, actually the first time, you know, since 2004 2003 has had a negative earning decrease. You can hear -7, and then it had one in 2023, -2%. It's almost flat. But estimates are expecting to be 6% 2025 growth, and 2026 5% growth. But you can see here, this is what I like. This is what I like to see on fast graph when I'm purchasing companies, is the earnings continue to grow year in and year out. And if we put price in this chart here, you can see here the best time was to buy it after the 08-09. A lot of stocks were like great time to buy during that time period. I started investing around the 2015 2016. That's when I started investing. But anyway, you can see here there's been times where the stock Johnson & Johnson will pull back to a multiple of 15, and you can see here over here in 2015 it had $91. It had a 14.8 multiple, and it bounced very nice. Kind of here as well, bounced, and then COVID happened. Great buying opportunity there. Then it bounced. And then over here in 2023, around the 15 multiple, bounce here, 15 multiple bounce here, 15 multiple bounce. And this is kind of what I'm expecting now. If not, and if it goes lower, I will be buying more shares. And I'm going to tell you where is my next level of buying. But right now, I bought shares at 143. Right now, the stock is up slightly today, so that looks good. But I would like to buy more shares. I have a cost average around $120 because I bought shares, a lot of shares during this time period here. So right now I'm just, averaging when I get a good opportunity to buy more shares. But you can see here it has an earnings yield of 6.9, which is good. I like to see this 6.5 or higher. A great dividend yield of 3.45. It's a AAA credit rating. Long-term debt to capital only 29%, so all looks solid. And the payout ratio is very low at 47%. Now we go to operating cash flow. You can see here operating cash flow covers the dividend very nicely, and free cash flow covers the dividend very nicely. And another thing I like to look at is sales. Is projected sales expected to grow? And yes, 3% in 2025, and actually 10% this year, which is really good, and then 4% in 2026. So sales are continuing to grow. If we look at EBITDA, you can see here it's undervalued based on EBITDA, and there's been very small period of time where you purchase undervalued based on the EBITDA. So that's real good there. Forecasting, if we go to, let me go over here, forecasting, long-term growth, analysts are expecting about 5%. So if it continues to trade around this 15 multiple, we could have a 9.9% annual rate of return for such a high quality company. Now if we revert back to its normal multiple, if we shorten this, let's say here the past 15 years, you can see here it trades normally around the 17 multiple. And if we go back to forecasting in the long term, and if it trades around in that 16.5, you can have almost a 12% annual return. If it goes to the 18 multiple, around a 14% annual rate of return. And we go here, I like to change this to the lowest multiple here. We got here 16.6. You can see here, even at this 16.6 PE ratio, you get around 16.2% annual rate of return. So this is why I bought more shares at this company. Analyst scorecard, they're very accurate with these estimates, so that I like that a lot. And so overall, that looks good. If we go to Fiscal Fitness here, you can see here free cash flow covers the dividend nicely here. Share buybacks, the company does buy shares back with almost 1% decrease year in and year out, compound annually over the past 20 years. Sales revenue, nice steady growth of 3.6, and so that's all good stuff there. Now we go to Morningstar. You can see here Morningstar gives it a 4-star rating, and the price hasn't been adjusted. You can see here this is December 4th, and I bought shares at December 16th, so it's gone down since that 150 price. But they have a fair price of 164 with a wide moat. They give it a 4-star rating, so that's one reason I bought shares. CFRA gives it a hold with a price target of 152, but again, this hasn't been updated. You can see here December 5th, so the price has dropped since then. And we got a 3-year projected earnings growth of 4, and you can see here 2024 they give it a 9.98 earnings yield, or an earnings expectations for the year, and 2025 expected to be $10.79. So that's all in the uptrend. That's what I like to see. So these are all good indicators here. So now if we go to technically why I bought shares, so if we go to the weekly chart here, let me zoom this out, and I'm pretty sure you can see it now here, right in this level here. Basically this zone is support, strong support here, support here, support here, and now we're going extended into support. So this is why I bought shares of Johnson & Johnson in that 143 area. Now it can go lower, it's very possible it could go lower, who knows. All I know is right now, based on fundamentally, back to the fast graph, fundamentally this stock is fairly to slightly undervalued for a high quality company, with almost a 7% earnings yield, nice 3.45% dividend yield that grows year in and year out. And the most recent increase was 5.6% in 2023. I'm expecting, let's see, if we go to Johnson & Johnson and Seeking Alpha, has they announced an increase this year? If we go to news and then dividend news here, so April is when they increased it. So we're expecting another increase in April. So in a few more months, 4 months or so, we're gonna get another increase. So that's gonna be lovely. And like we go back to fast graph here, over here, they have plenty of room to continue to increase it. We saw the operating cash flow and the free cash flow. So back to the technical chart here, you can see here this is why I bought shares. Now if we go to my next level of buying opportunity, we come to the 3-month chart here, and as you see here, right here, the $130 to $125 area here, this is where going to be my next buying opportunity. So right now I'm going to wait with what I have and wait for a pullback on Johnson & Johnson. If it does break this support area, I am going to be buying shares around the $130, $125 area. Now we go back to fast graph, where that's going to be. So we got here 125. You can see here that will probably be around this level here, and you can see it's going to be extremely undervalued. It's going to probably have almost a yield of 4%. And such a high quality company at 4% yield, the growing yield with great payout ratio under 50%, I like it a lot, and I'm going to be buying more shares around this 130 and 125. So this is going to be my next level of purchasing Johnson & Johnson, and you can see here the final level will be here, the COVID low, which is $109, so around 110, 111. I'm going to be buying more shares, so it's going to be around this area right there. So that's going to be the one area, and then the first area that I'm going to be buying will be around here, this area here. So this will be 130 to 124, 125 is going to be the area I'm going to be buying more shares, and then the final area will be this 110 to 112 area where COVID low. So that's where I'm going to be buying more shares of Johnson & Johnson. So if we go to the monthly chart, you can see here it broke this trend line on the monthly. You can see how it bounced here, bounce here, bounce here, bounce here, and then it broke, and then it tested it twice. So it could go down here because now it's under this moving average. So that's a possibility. But again, I bought shares, and I'm gonna be buying more shares down in this level. This is a high quality company. You saw in the fast graph how great it looks. Even if I remove the price, it just continues to grow. Forecasting long-term growth around 5.3%, continue to grow, and this is why I bought shares, and I will be buying more shares at that price point here, which was first at 130. It'll be one area I'm gonna be buying one lot, and then at 115, 110, I'm gonna be buying more shares, and then wait and see after that. And you can see here also, if we stand this was resistance right over here on the 3-month. You can see here this was resistance, became support, and I'm expecting strong support here in this level, and I will be buying more shares at this level. So thank you guys for watching. Make sure to hit that subscribe button if you're new to the channel. Let me know in the comments below, what you think of Johnson & Johnson. Have you been buying? Do you own shares, or you're not buying shares? And let me know why you are buying or not. Thank you for watching. Make sure you hit that subscribe button and like this channel for more videos like this. And I'll see you guys in the next one.